Thanks, Stewie, and thanks everyone for coming along today. It's great to see a lot of people in the room. Obviously, the boom is back on. I was introduced recently as being a veteran of the industry, God help me. And what I can say is that these are the best of times. You don't get many times like this in the 20 years that we've been around. So please make sure that you invest wisely and make the most of it, because it is truly astonishing what's been going on in the market in the last few months, as Hedley Widdop said this morning. And what is also astonishing is this lake here in Western Australia, because in the top 2 metres of that lake is something in the order of $15 billion worth of a niche mineral that's not widely known, but high purity alumina. And we now own 80% of that by having completed a pre-feasibility study on it, which has some world-class economics. And that's really what Impact was set up to do all those years ago, looking for a world-class ore body. And we truly believe that we have one here, and we're going to bring that into development over the next couple of years. And so it's a journey that you should be definitely on board with. And as part of that acceleration into the HPA industry, we recently acquired a 50% shareholding in actually some of the assets of one of our competitors that failed to get into the HPA space. They failed because of financial mismanagement. When we looked under the hood, there was a fantastic technology that we believe is a natural bolt-on to our Lake Hope project, and will accelerate our entry into the HPA marketplace by a couple of years. That's the formal way of saying it. The other way of saying it is that we're going to dig up some clay out of a soft lake in WA. We're going to ship it to Perth, put it through some plastic tanks and pipes that we paid $2 million for, and convert it into this. And this is the Las Vegas Dome. If you've never been there, I've actually not been there, but on that dome there is something in the order of 1.8 million light-emitting diodes, as does every other light that you're seeing in there, and virtually every other light being put in globally, and also in virtually every electronic device that's being built globally. And behind every LED is a small wafer-thin piece of artificial sapphire, and that sapphire is a form of high-purity alumina. So we believe that with the cheap mining of our lake and the novel new process that we've acquired, we're going to be able to transform the production of HPA, because we will become one of, if not the lowest cost producer of that material globally within the next couple of years. So we've talked about LEDs. There's also a burgeoning use of HPA across a wide range of industries. Artificial sapphire is used in watches, lenses. It's on the front of most people's smart screens. It's used extensively in defence applications, on the tips of missiles, and in windows on all fighter jets, etc. Burgeoning demand in the ceramics industry. I'm not saying anything about this audience, but I might need an artificial hip soon, and that's used in medical ceramics, because HPA is generally chemically inert, thermally inert, and so as a result, it's very biocompatible. But the biggest area that's growing at the moment is in semiconductors, where it's used in two main areas. It's used actually to help the heat build up in these data centers dissipate and keep the semiconductors themselves relatively cool. So on the top of every semiconductor, you can see a little square package on the top of the semiconductors in that picture there. That's actually a piece of HPA, allows the heat to pass through and keeps the semiconductors cool. It's also used to help polish the silicon carbide that's increasingly used in many semiconductors, because it's actually one of the hardest substances, second hardest substance known to mankind after diamonds. So wide range of uses, and that same thermal inertness and also chemical inertness has a burgeoning use in lithium-ion batteries and also sodium-ion batteries to help prevent heat build-up and thermal runaway. And we've all seen pictures of the Tesla batteries catching on fire, and that's because the separators weren't doing their job properly. So we're seeing an annual compound growth rate of about 20–25%, and this is what we might call a classic sort of supply and demand curve, where in the blues we're seeing forecast demand being driven by those 3 or 4 areas that I've just shown. So the market at the moment is probably about 70,000 tonnes. Doesn't sound very much, but because the material is difficult to make, what we're seeing is more production is coming on stream. We're seeing a burgeoning use into other industries, and so we've got so that's the demand side on the blue, sorry, and in the bar chart we're looking at supply. So we're going to see a tightening of supply over the next 2 to 3 years, in particular sort of 27, 28, running into the end of the decade, and that's when we aim to be coming into production. So what is HPA worth? When we talk about high purity alumina, we're talking about a benchmark of about 99.99% pure. For those of you who are mathematically inclined, that's only 100 parts per million of impurities. You can get purer material, 5N and 6N, which commands very high margins, but there's not a lot of volume there. So the volume and the way to build your business is in the 4N and even into the 3N space, and that's one of our plans to get to market quickly. So high prices for the end products. It's a high margin and high demand business and a very good place to be. So how much HPA do we have? Well, it is an industrial mineral. There's no shortage of minerals that you can take to convert into HPA. It's all about the cost of processing it. And so we've put out in our PFS, we've got a reserve now, an ore reserve, so it's been definitively defined as economic underneath the JORC code. And we've got enough there for at least a 40-year mine life, if not 100 years mine life. All of our economic modelling was based on a 33-year mine life, so plenty of material. And we talked about the soft material. This is how we drilled out $15 billion worth of HPA, and it's with a high-tech rubber mallet and a plastic push tube. And the entire drill program cost us 150,000 Australian dollars. And normally, I do start to lose people at this stage because they can't compute the difference between how much money we spent to get this certain value out of it. It's probably one of the best return on a drill program investment ever in the mining industry. And it comes out looking like this. It's all micron to nanometer sized particles. And so as a result, it doesn't need any on-site beneficiation, doesn't need crushing, doesn't need grinding. We've also demonstrated we won't need power on site, we won't need water. We're just basically going to dig this material up and ship it to Perth for processing. And so as a result, we're going to have a very low environmental footprint, just leave a hole in this lake here of about 1 to 2 metres deep. And the plan is very simple. We're just going to drive in off the side of the lake for 3 or 4 months of the year when it's nice and hot and dry, and then we're going to stockpile material and then truck it into Perth. So normally, because it's in a salt lake, we get 2 questions. What about the environment and what about the native title situation? So we've already done baseline environmental surveys on the lake surface. We're all cleared for mining. There are no threatened or priority species. We've also completed heritage surveys with the Naju community. Again, no impediments to mining on the lake. And our discussions with them now are all about what the benefits are for them as their community, rather than can we mine there or not. It's a whole different mindset that they have. They're based in Norseman, a big gold mining town, and they've done numerous deals in the last couple of years. So we've got a big tick from both of those to get the mine into operation, and we have a mining lease application already lodged over it. So this is actually where the project is in Western Australia, Tier 1 jurisdiction. There is no better place to work. I understand there's a discussion this afternoon about WA versus Victoria, and probably should be maybe a little bit feisty, but WA still has my vote. And we're going to truck it 500 kilometres into Perth, 2 truckloads a day, and we have a site identified in Kwinana. As I mentioned, we've just completed the pre-feasibility study, and it is all about the team. A very experienced PFS manager who's now moved on as we move towards the DFS. But the secret here is our husband and wife team. In the top right, Eugenia and her husband Scott Fegan, and they come to us with 50 years of alumina experience from Alcoa. So they've built alumina plants, they've taken them apart. Scott was one of their top technical people globally, and they also have their own smarts for high purity minerals that we've tapped into. Eugenia works for our engineering firm, who've done the engineering design, and Scott works for us virtually full-time, managing the test work programs that we do that leads to the HPA. And last year we employed a gentleman, Joseph Casella, who was the commercial manager for Tianqi Lithium, who obviously have their lithium project in WA. Small team, super experienced and very focused. Now, I mentioned world class. This is the PFS. This writing is a little bit small, so I do apologise for that. I've talked about a laser pointer, but we'll see if we can get on next time around. The biggest thing here, so production rate, we've used what we call the benchmark of 10,000 tonnes per annum. And that seems to be the number that we use in the HPA sector to allow people to compare apples with apples, so other companies. And so the biggest one that you might be familiar with is Alpha HPA. Their code is A4N. Current market cap is $1 billion. And 7 or 8 years ago, they were like us, a small junior company that came up with a new method to produce HPA. They're now scaling up to 10,000 tonnes per annum. And so we can match our economics to theirs. And what we've done, we've taken a very conservative product sale price. We've also used a very conservative discount rate to get to what's called the net present value. you'll often hear people talk about the NPV. What does that mean? It means what's the value to us right now in the ground? If someone came along and wrote me a check, what would they have to write for me to sell that to them? And they could still go on and make money. And that number is actually about 1.2 billion Australian dollars. That's a world-class number, as is the secret to it, which is the operating cost. So when we're looking to produce our HPA at a very low cost of about $4,500 to $5,000 a tonne. So this now is actually a cost curve analysis to see how that compares to the production from current producers, which is the Chinese and the Japanese, shown in green and purple in through there, and new entrants in the next few years. So we kind of jumped into the few years into the future, and we're saying Chinese and Japanese continuing their market share, and then we've got Alpha HPA in the light blue there, A4N, and then a little old Impact down there at the bottom end of the cost curve. So the current incumbents, Chinese and Japanese in production, they're probably producing at between 12 and 15,000 US dollars per tonne of HPA. Alpha's coming in at 7 to 8, they think, net of byproduct. We believe that we're basically 4.5 to 5, including our byproduct credit in through there. And that dotted line up there is the average sale price that we've used in the scoping study. So you can see huge margins, and as a result, huge cash flows, hence the world-class economics. And a payback of 2.2 years for those that are that technical. So the thing about HPA, you probably heard a lot of people talk about high-purity minerals over the years. High-purity graphite, high-purity manganese, high-purity silica, to name but a few. But very few have got there, and in particular in the HPA space. And that's because there are a number of barriers to entry into high-purity anything. And I'd like to say that barriers are a good thing and a bad thing. So they're bad in the way that they're difficult to get over. But once you're over them, you have what Warren Buffett, Muffet the Buffett, would like to say a moat. You've actually got a moat around you, and it's very difficult to get over that moat. So these are the 5 barriers, the key ones you've got to get over from an initial HPA project. One, it's just difficult to make high purity anything. Secondly, it might seem like a minor thing, but you need your own laboratory, your own analytical laboratory to speed up the turnaround time for the assays, and that was actually what sent Chemex under, taking too long going to commercial laboratories. So they bought their own lab, set it up, but ran out of money too quickly. I won't dwell on this today, but it's certainly, if you can't recycle your reagents, you will never, ever get there. That's the single reason that most of the kaolin producers that wanted to do HPA can't get there, too much acid required. Fourth, clients won't take you seriously until you have a pilot plant at least. And then finally, after all of that, you've then got to scale up your financing, and you have to balance debt versus offtake. And industrial minerals in general, that's a very difficult thing to do. And you might have heard, maybe Bruce was talking about that this morning. And you've got to jump through all of those hoops before you get through the funnel to a successful HPA business. So if we deal very quickly with each one of those. So in terms of purity, we got a $2.8 million grant, co-funding from the federal government last year to work with Edith Cowan University to actually implement membrane technology into our flow sheet. Now, membranes have been used extensively in the water treatment industry for decades, but amazingly, it's hardly been used at all in the mining industry. We're doing some amazing stuff to simplify our current flow sheet, including crystallization of byproducts like potash, et cetera, which are really going to change the game for us. And those are going to underpin our move forward into the DFS. But really, a lot of the advantages have come from our acquisition of the Chemex assets. The process is called Hypura. The company it's in is called Illuminous. And it's basically a bolt-on. The feedstock that we currently use is very similar to what we have in the lake. The process at the back end is very similar to the chemistry that we understand from our own research. So we also bought a fully functional high-purity laboratory. There's only 3 of them in WA that can measure to the number of, to the accuracy that we need and the number of elements that we need. That is now up and running. This is the Chemex story. I always like to show this. We just took the last lot that Chemex did and crossed it out and stuck Impact's name over the top of it. But importantly now, dealing with reagents and also clients taking it seriously, we've bought a 25-tonne per annum pilot plant that was 85% complete. We're now in the process of commissioning that, and we believe that this facility can be expanded to a couple of 100 tonnes over the next few years. But the biggest thing that we bought, again I won't dwell on this, is that we bought 2 years in time. At the moment, there's only Alpha that has a pilot plant capable of producing any quantity of material, and they've got their commercial plant being built, the 10,000 tonnes. So we've gone from test work now to having our own pilot plant, And as of the end of this year, we'll be the only other company on the ASX capable of producing anything like a commercial quantity of HPA, and also everyone else is at least 2 years behind us. And lastly, in terms of financing, the whole process is modular. We believe we can build plants that are 1,000 to 2,000 tonnes in size for, say, tens of millions, not hundreds of millions of dollars, which is what Alpha have done, and they got free money from the government, basically, to do that with. And the plan is very simple. We're going to expand and start our development overseas in these smaller plants within the next couple of years. Forward plan, so right now we're finishing the plant, we're getting it up and running. We'll engage with customers at the end of this year, once that pilot plant is going. Next year is the big talk of engaging with customers and clients, and then we're going to look to establish a base in North America. We have American investors in Aluminous with us, and we're looking to set up production facility probably in the thousands of tonnes per annum as soon as 2027. And that's about the time Alpha will be finishing their plant and looking to also establish their next plant in the US. And so we'll have caught them after 4.5 years. It's taken them 10 years. We've just raised $4 million in the last couple of days. We're well funded for the next 18 months, and it's a great time. And I'll just finish by saying that was Alpha's journey. We're accelerating on that. They've discovered that there is actually indicative demand for at least 30,000 tonnes of HPA, and they're only building a plant for 10,000. So I guarantee you that if we build this plant, the customers are going to come. So look, I invite you to come on the journey with us. We've got a world-class deposit. We're going to be one of the lowest cost producers globally. It's the unique Lake Hope deposit. We've got now an industry-disruptive metallurgical process. The area we'll be building out our skills in the next 18 months is in the metallurgy and the final product specification. And hopefully we'll get our timing right, 2027, 28, when all of that tightening of supply is happening and when we come into production. So please come with us on the journey. Thanks very much.